Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you, as every weekend, my weekly update for week 27 of 2021. And first of all, here just a short view on my overall performance since the start of this portfolio at the 2nd of December 2019. And this portfolio have a performance of 66.8%, which is quite an outperformance to the S&P 500 over the same time span, which has a performance of 40.33%. And as I said in this video, I want to give you an update of the last week, and we have these topics. First of all, there was a big news for stamps.com yesterday. Then we take a look at all the transactions of last week, the received dividends, and the performance overall. So let's go. But before we start, don't forget to subscribe and ring the notification bell to never miss another video, and join me on my road as a long-term value investor. Thank you. So, first of all, stamps.com was really the biggest news, the biggest thing last week, or especially yesterday on Friday. I made a video about stamps.com a while ago in March 2021 and explained at this time why I bought these at the time undervalued stock. So feel free to check this out. You find the link here up on the screen or down in the description below. And so stamps.com was part of my portfolio, but you can see it was the smallest position in my portfolio. And yesterday the news broke that Thoma Bravo is taking the company private for $6.6 billion. And after this big news that Thoma Bravo will buy the whole company for $6.6 billion, the stock just rocketed over 60% up. And when we go through the whole article, then it says shares of stamps.com rocketed more than 60% Friday after Thoma Bravo agreed to buy the e-commerce shipping provider for $6.6 billion. Thoma Bravo, a Chicago buyout shop, is paying $330 a share for stamps.com. The stamps.com's board has approved the deal that will see stamps.com a private company. The transaction is expected to close in the third quarter. The sale to Thoma Bravo includes a 40-day go shop, which expires on August 18. This provision allows stamps.com's board and its advisors to actively seek out and consider alternative takeover offers from third parties. Go shops, however, rarely result in a higher bid, mainly because the parties lack time to conduct due diligence. And so, in short term, the whole deal is Thoma Bravo take whole stamps.com for $6.6 billion. This is $330 per share, but stamps.com have 40 days to look out for a better offer. That's the whole deal in a few sentences. And so yesterday, as I said, the stock of stamps.com just rocketed 64% up at the closing to now $324.23. And the question became what to do now with my position in stamps.com. And with that, we are at the transactions of last week. And because stamps.com rocketed 64% up to $324 at the closing yesterday, I decided to sell my 8 shares for $323.10. And the reason I sold is that the upside between the $323 I sold my stocks for to the announced $330 per share from Thoma Bravo, there is not a lot of upside anymore. And so I decided to sell because also, like the articles say, it's very, very unlikely that stamps.com will get a better offer in the next 40 days. So, of course, if you speculate on a better offer, then it's maybe time to buy for you. For me, it's very, very unlikely. And so it was time to sell stamps.com for $323 yesterday. And here a short look at all the finished trades in my portfolio since the start at the 2nd of December. And you see stamps.com has a return of 79%. And then you can look also at all the other transactions are already finished. That the closed trades since the 2nd of December 2019. So 1.5 years, a little bit more. And you see, this is not so much. I don't like to buy and sell all the time. Normally, I just stick with my companies until they go way over the intrinsic value. And so it was also with stamps.com. My calculated intrinsic value was around $200. And now Thoma Bravo just paying a big premium on this intrinsic value. And so I was able to gain. And of course, it needs a lot of luck to be at the right place at the right time with the offer like this. No question about this. Not a lot of people in the world knew about this deal was coming. And so this is, of course, lucky. But if you invest in quality businesses and high profitable businesses, the chances that something like this happen is just higher. And so this is a whole deal on this portfolio, on this channel. I try to invest in high quality companies, and then normally so good things happen the one way or the other. Then I also added 10 more shares of MI Homes, and this is not a deja vu. It's almost like every week I add a little bit to MI Homes, and last week I added another 10 shares for $56.80. And the reason I added again is just because I think MI Homes is a great company. I also made a video about this, like about every other stock in my portfolio. You find the link here up on the screen or down in the description below. Lately, the stock price just declined a little bit or even a little bit more from around $70 in the peak to now $56.80. And so I just add over time. You see this here on the screen, on the chart with all the green dots. These are all times when I bought some of MI Homes. And so a little bit here, a little bit there. And now I'm already own 110 shares of MI Homes with a purchase value of $7,022. And I'm down 10%. But as I said, it's a very good company in my view. And so if the stock price remain that relatively low or even fall a little bit more, it's likely that I add at some point even more of this great company. And just the same with Tencent. I also added another 10 stocks of Tencent at $71.61. And also with Tencent, it's almost the same story. It's a great company. You'll also find a deeper analysis on my channel or here up on the screen of Tencent. And also here I add over time more and more. And so now I own 79 shares of Tencent with a purchase value of $5,972, and I'm down 6.28%. Then take a look at the dividends. And last week I only received my dividend from Imperial Oil, and I received $29.35, which is quite a little bit of cash flow into my portfolio, and that's nice anyways. And with all of these transactions and received dividend, my current portfolio look like that. So Intel still the biggest position, then Berkshire Hathaway, Bank of Nova Scotia, and so on. And the biggest position in my portfolio is my big cash position of 29.51%, which is too high in my view, because I like my cash position between maybe 15 and 20% in normal circumstances. But right now, with a really high valuated market, it's very, very difficult to find good businesses for reasonable prices. And so the cash just mount up a little bit. And that's also the reason why I just add to the positions I have in the companies I think they are way under their intrinsic value. And that's right now MI Homes, Tencent, Alibaba, maybe the insurances, but that's it. and all the rest is at the intrinsic value or even over the intrinsic value, and so there is no reason to add. And if you're new to my channel, just a reminder that you find deeper analysis to all of these companies on my channel. So check this out. And then last but not least, take a look at the performance of my portfolio. And first of all, a view at the performance of every single stock. And here, even if Imperial Oil came back a little bit over the last few weeks, it's still the best performing stock in my portfolio with 98% in the plus, then followed by Facebook, Ledger and Plaid, and so on. And as we saw also before, the Chinese stocks, Tencent, Alibaba are in the minus, and also MI Homes right now is in the minus, which is not a big deal, as I tried to explain. All of these companies are great and very profitable companies, and so I'm very happy to own them, and I'm even more happy to have the chance to buy more to reasonable prices. And then just stick with it, and sooner or later the stock price will go up to the intrinsic value. That's the whole idea. That's the whole idea of my investment philosophy and the whole idea of this channel. And with this idea, I have a performance since the start of this portfolio as a 2nd of December of almost 67%. And even if my portfolio also draw down a little bit over the last couple of weeks, it's still a big outperformance to the S&P 500 over the same time span. And if you like the whole idea, then please subscribe to my channel, ring the notification bell to never miss another video. And if you like this video, please give me a big thumbs up. This helps the YouTube algorithm and my little channel so much. Thank you for that. That's it for today. Then we will see the next time with another analysis of another stock, and next weekend, of course, the full insight again on my weekly update on my real money portfolio. See you then. Take care. Bye bye.